Now to talk about that and the investments that the president secured in Saudi Arabia and Qatar is the founder of Walser Wealth Management, Rebecca Walser. Rebecca, thanks so much for joining us.
Thank you so much for having me, Amanda and John. I appreciate it.
It's been a real fast turnaround for folks who I think the beginning of April, sometime around April 6th, said that an economic downturn, a recession was all but inevitable. And now, lo and behold, I think J.P. Morgan is the one who definitively pulled that back. Any chance that they're going to waffle on that and go back to, we might have a recession?
Well, I mean, obviously, the developments in the last, 15 days have been phenomenal and unprecedented. And this president and this administration deserves so much credit and so much, hand clapping. And so I'm a huge fan of what they've accomplished. We can't really say how great it has been and how different of an approach globally this has been. This president has the nerve that he needs to have and the grit that he needs to have to go after such an uncompromising and unconventional way of really, I would say, managing the global interaction on the economic front. This 90-day pause that we got with China, which really sent the equity markets, gave them such a needed reprieve, that is obviously TBD. We obviously have to work things out with China on the longer term. And China, unfortunately, their property, their real estate had a really big sort of beginning crisis last year that they're not still really out of. And then this tariff issue with them and the amount of exports that they were going to be able to forecast to bring in at the tariffs that Trump was putting on was going to decimate their economy. So Xi Jinping had no real ability to do anything but, hey, let's pause and let's talk. But what Trump is doing is he's got so many wheels in the fire. Thank God he's got an excellent team around him. But so we can't say that it's time to top off the champagne glasses yet, because this is how he negotiates. This is what he does. He goes out and he creates such a ruckus and such a stir because he's letting them know, look, I hold the cards. We hold the power. We are the world's really largest economy. Some people would debate that with China with GDP, some numbers sometimes, but we'll say we're the largest economy, China number 2, and we are the global reserve currency still to this day. Now, that's obviously under threat with all of the things that have been happening globally. But Trump is using the cards that we still have in America to leverage the future for us in a better way instead of just debt financing it and leaving it, into shambles. And that is going to take time and patience. And so all of the positive information these last 15 days has been really great. But, TBD on the finality of it. It's going to be a back and forth. It's going to be a negotiation, and that's going to go through iterations.
Yeah. I see a couple of real concerning signs still that we need to take a look at. In our own country, there seems to be at least a commercial real estate market, a sort of post-COVID hangover, and a change in the workforce, the way people are working. And then the gap between mortgages and affordability continues to be a problem for homeowners. What are the biggest warning signs for you about things we still need to keep an eye on as we watch this next 6 months of history-making economy?
You're 100% right, John. We definitely have a commercial loan crisis, actually, more than anything. And that really leads into a banking crisis. I don't think that people understand how tied our medium-sized banks are, not necessarily the large 4 banks, but our mid-sized banks are absolutely the property lender of first resort for most commercial entities because they know the local property market. And so we have billions, if not close to $1 trillion, about $900 billion of real estate mortgages, commercial real estate mortgages that are due to refinance in the next 18 months. And the problem is that the values of the properties, to your point, John, have declined substantially because nobody is utilizing those buildings at the capacity that they were pre-COVID. So when you've got hybrid schedules of people in the office for 3 days, the dry cleaner can no longer rent his space because people don't need to, have the clothes for 5 days a week. Or maybe there's a different dress code policy, or the little mom and pop shop that were the cafe in your building, they're gone. Or all of the cafes that surrounded in an urban center, those are going because where are the clients? So what happens is as we changed our work, arrangements, this affects the value of being in commercial property, and therefore those appraisals are not going to come in at the pre-market value that they were, actually financed at. And so a lot of banks have been kind of pushing the refinancing of these notes beyond like grace period and getting things. And at first it was because they wanted the interest rates to come down. They're like, oh my gosh, Powell raised rates so fast between 2022 and 2023 that the loans couldn't be refinanced at such high rates. So it was really about, we really need to lower rates. But if we actually refinance these commercial loans at the higher rates and we don't have the property value, we're going to have to recognize losses. And that's the unrealized losses that are sitting on all of these banks' balance sheets. And that's the problem. We don't have a system. I mean, I hate to say this, but if you look at the FDIC balance sheet, it really only has hard assets of about 2% of what it says it insures. So our system is a system built on trust. And if that trust is broken, it will cause problems. So we do have a lot of issues that this administration is going to have to deal with. And this is what happens after you print $10 trillion between fiscal and economic policy and through a pandemic, and then have to deal with the fallout of inflation, which this administration is obviously doing a great job with so far. And you have to deal with the fallout of how it affects, all of the things that are tied to our financial communities.
Yeah. Rebecca, President Trump has been doing his businessman thing and out raising capital for his company, the company being the United States of America, and he's going to hit that $10 trillion mark very soon. I think a lot of Americans look at that, though, and they say, well, how exactly is that going to affect me as an everyday American? How does that trickle down to me? How does it?
I think even the message of tariffs has been so unfortunately misconstrued by the mainstream and been pushed on the American population as this draconian, nobody uses tariffs for economic policy. What is this? It's totally not true. We've absolutely had this leverage before successfully. And again, he's leveraging the cards that he has. But let's be honest and let's be clear. Our country became very litigious, and basically I'm a business owner, I'm an entrepreneur. I write the checks on the front, ACH these days, but I authorize the checks that get paid to my employees. And the fact is that when you become too litigious to actually manufacture in your country, you actually outsource that to overseas. And that's what we did. And, China joined the World Trade Organization in 2001. They've had the most favored nation status since then. And it's ridiculous that they would have such a status when they are the second largest. That's for poorer countries. So they get a lot of passes on the world global stage because of that status. And Trump is basically coming in and saying, listen, during COVID, we literally didn't have a supply chain that was resilient enough to even support our medical needs for prescription medications in our own country. So we are dismantling the ability to afford home ownership because we have basically hollowed out our middle class by outsourcing the good paying jobs overseas. And that happened naturally for a natural sort of way that we became too litigious, too expensive to manufacture in our country. That's our own fault. We have to fix that at tort reform, all kinds of things. But then we still need protections. I'm not against worker protections, but worker protections that are so expensive that you go out of business doesn't do anybody any good. We have to basically unhollow out the middle class that has basically, we're really a bifurcated economy, and to the upper wealthy and really the lower bottom class. And there's a very hollow middle class because all of the jobs that were blue collar other than trades have been outsourced manufacturing to Asia basically since really it started in the 80s, but it has just taken off since the millennia. And we cannot have a country of taxpayers that make a good wage base if we literally expect to buy everything for cheap pennies on the dollar at Walmart.
That's a great point. Real quickly, we only got about a minute left. Congress has a role here too. President Trump's got a lot done. What does Congress have to deliver to make sure it doesn't put the economy into another part of hurt?
Well, we obviously have the debt ceiling issue that still has to get resolved. We can't have that, pop up. And he's doing so well, everything's going well, and then we enter this debt ceiling issue. That is an issue. And then also we need the tax reform to be reinstated. And as you know, or to be re-upped, it automatically sunsets because it was done through the budget reconciliation process when it was originally passed in 2017. And so it had to be sunsetted as a matter of course. And it does sunset at the end of this year. And so obviously you have Republicans that are in the higher tax tax, blue states that have a really big problem with the SALT limit that is current set at 10,000, and that stands for state and local taxes. A lot of people think that I'm a tax lawyer, but a lot of people think, what is SALT? State and local tax is what it stands for. And those property tax reductions got reduced that were being augmented in California, New York, New Jersey, Connecticut. That got augmented to it got reduced to only $10,000. And so people were basically paying federal tax on money that was really being paid as property taxes to their state. And that's a big holdup right now that has to get worked out as well.
Yeah. Rebecca Walser, thanks so much for joining us tonight. We'll have you back on again very soon.
Thank you both.
Yeah, good to have you.
All right.